This is an analysis report on Broadcom AVGO, arguing it's poised for a big jump next week. It's based on Q4 momentum, huge AI growth, the VMware deal, and a massive order backlog. Let's get right into it. The first thing that jumps out at me is just how solid the data is here. You've really anchored the whole argument in hard numbers. That 63% AI revenue growth, the 78.4% GAAP gross margin. The data itself is professional grade.
Absolutely. The raw material is. It's undeniable. You've got the financials, the catalysts like VMware, that massive $110 billion backlog. The foundation is rock solid. The challenge, I think, isn't the argument itself. It's making sure the delivery, the whole package, actually matches the sophistication of the content. We need to elevate the analytical rigor so it connects with the right people.
Yeah, okay, so let's start there. Let's start with how this whole analysis is framed. I think the material suffers from a really jarring tonal inconsistency. It's between the promotional hook and the very sophisticated financial data that's being presented.
A real disconnect.
Exactly. The weakness is right there in the title. You're using this really aggressive language, AVGO learnings alert, and SKYROCKET.
The emojis. Yeah.
Right. And that creates this stark conflict with the paragraphs that follow, where you're detailing these complex professional metrics, like 78.4% GAAP gross margins, or $10.7 billion in adjusted EBITDA.
And when you're citing GAAP metrics that are that precise, any hint of hyperbole, it just risks immediate dismissal. The financial community sees that and just move on.
It just kills credibility on arrival.
That's the core issue. The analysis itself is presenting as this serious, almost institutional grade piece of research. But the title is screaming speculative blog post. So the suggestion has to be to unify that stylistic approach. If the goal is institutional credibility, which the data clearly demands, then the tone has to be professional, consistently, right from the headline.
Right. You can be confident without being loud.
Exactly. Confidence doesn't need exclamation points, it needs authority.
I completely agree. So instead of chasing clicks, we show restraint. We show expertise. One way to do that is just revise the title. Turn it from a high-frequency alert into a substantive assessment. For instance, something like Broadcom AVO Q4 Momentum, assessing the impact of custom AI and $110 billion backlog visibility.
See, that immediately signals serious intent. It tells me exactly what I'm getting.
And that refinement should probably carry through internally as well, right? We should look at some of the language used to describe the core drivers.
Oh, absolutely. If we're aiming for that institutional quality, you have to rephrase some of those more evocative descriptors.
Like what, specifically?
Well, changing something like the secret AI monopoly?
Ah, yes.
To something more analytically rigorous, something measured. Maybe Broadcom's strategic advantage in custom silicon, ASICs. It immediately elevates the whole analysis.
Because it signals you understand the market dynamics deeply, not just superficially.
Precisely. That simple shift in vocabulary tells the reader you're focused on strategic positioning, not narrative hype. It's a small change, but the cumulative effect of that professional language, that measured tone, it's massive, especially when you're talking about a company with a market cap this huge.
Okay, so now that we've cleaned up the framing, we can talk about the integrity of the content itself.
Right.
This is our second big opportunity. It's about bolstering the analytical integrity. To maximize the rigor of this material, the inherent risks, the limitations, they have to be explicitly addressed.
The other side of the coin.
Exactly. The core weakness right now is the lack of balance. You've built this massive, really comprehensive case for the stock to go up. You're citing the backlog, VMware, the V-shaped recovery.
All very powerful points.
But you completely omit any potential counter-arguments, any downside risks. For instance, the report notes a trailing PE ratio of 99.69.
Which is basically triple-digit valuation territory. It's huge.
It's huge, but you never once explore what that actually implies for volatility or for managing expectations. In high-stakes financial analysis, that kind of omission, it just creates a perception of bias, not due diligence.
That 99.69 PE is the elephant in the room. A sophisticated investor will immediately flag that number as a massive potential headwind. And if you don't address it...
They assume you either miss it or you're hiding it.
Exactly. Either way, credibility is shot. So the suggestion here is to introduce a mandatory section, maybe call it potential headwinds or risk profile, that directly addresses these big structural and valuation concerns head on.
And that doesn't weaken the bull case, does it?
Right, because you've shown you've already considered the major bear arguments and you still maintain your thesis. It shows command.
It buys you credibility and trust. A balanced view is a convincing view. So what are some of the actionable things we can do here?
Okay, well, we dedicate a small, focused section to that valuation problem. Give it a clear title, Managing Premium Pricing, the 99.69 PE challenge, and then outline specific scenarios.
Like what?
Like, if AVGO merely meets consensus earnings, could the stock still react negatively? Because expectations are implicitly priced for some astronomical beat, right? You have to outline how these high multiple stocks punish even minor disappointments. It prepares the reader for that potential volatility.
Okay, and we also need to drill down on the biggest operational risk, which is that massive VMware integration.
Right. The report forecasts billions in recurring revenue, which is powerful. But an integration of this scale is always messy. You have to acknowledge that.
So proactively discuss the potential risks there. Unexpected transition costs, maybe enterprise customer churn after the acquisition, things that could dampen that forecast.
Precisely. By addressing those challenges, the premium valuation and the integration risk, you inoculate the analysis against those immediate critiques. And it makes the final bullish conclusion far, far more robust.
That brings us to our final area of focus, which is all about optimizing the structural flow of the report.
How the argument is built.
Yeah, exactly. The placement and density of the financial metrics right now, they actually impede the natural flow of the core investment thesis.
The data dump?
The data dump, that's the perfect term for it. The weakness is that huge, one-paragraph financial summary. It's just this massive, dense block of every single number you researched.
Right after the hook.
Right after the hook and right before the SKYROCKET thesis. You've just dumped market cap, Q3 revenue, free cash flow conversion all at once. It forces the reader to stop and crunch numbers before you've even explained why any of them matter.
It just halts the narrative momentum cold. It creates this massive friction. The numbers are crucial, of course, but they need to serve the narrative, not interrupt it.
So the suggestion is,
it has to be to restructure the piece. Break that dense summary into more digestible, segmented data points, and then integrate them contextually within the relevant theses arguments. The data should appear at the exact moment it supports a specific claim.
okay, I can anticipate a concern with that, though. If we break up all the financials, do we risk losing the immediate impact of showing how financially healthy the company is right up front?
That's a valid worry.
We don't want to bury the lead on financial stability.
No, and the solution there is careful triage. You keep the absolute highest level metrics, the ones that are pure catalysts, like the $11 billion backlog and the 63% AI growth rate, you keep those in the initial summary.
Because they frame the entire argument.
They do. But the supporting, more granular data, like the exact $15.95 billion Q3 revenue figure or the 44% free cash flow conversion, that gets moved into the sections where it provides specific evidence for your claims.
So, practically speaking, when you discuss the VMware thesis, that's where you drop the data about the $10.7 billion adjusted EBITDA. You directly link the number to the claim that AVGO is becoming a software powerhouse. It makes the evidence immediate and impactful.
Exactly. You're using the data as ammunition for your claims, not just as a list for the reader to sort through on their own. And for streamlining, maybe consider moving the most specific, secondary data like the exact dollar amount of the daily price increase, the 9.21 move, that to an appendix or a footnote.
And just reference the percentage gain in the summary.